Okay, I hope I can finish what I started. Oh, damn it. I really hate when I see something like this happening to me. Okay, I'm so sorry. Regarding my internet, I don't know what to say. I plan to stream today after a long time, and today is the day my internet is messing me up. Okay. Okay, so are you guys back here? Let me know if you guys are back here or not. Just say hi or something in the chat. Okay, and I'll just pull my chat as well. I will just pull my chat. Guys, I really don't know what's happening in timestamps participants. Okay, so you see the speed is looking really good over here. However, it's the speed on it's the speed on upload side that sucks in Australia. Okay, don't get me wrong, it's the upload speed that sucks. So I'll just quickly go through what I started and then I will finish it as soon as possible. This is what my internet speed looks like at the moment. However, it's still messing me up, and instead of top chat I need the live chat. So you see the upload speed, before it was like 26 or something, now it's 18 or something. So anyway, let me finish what I started. I don't know how many of you actually are here with me at this moment, but I hope if you are not here, later on you will see it. So this is a possible old high and old low on the higher time frame. Now your higher time frame, it can be it can differ. Okay, how it can differ is, if you are trading on, let's say, 1 minute, your higher time frame will be mainly will be 15 minutes, and the max you want to go is 1 hour. But don't get me wrong around this area, this is the max you may need. Believe me guys, this is the max you need if you are sticking with a set rules. Okay, something that makes sense to you. You cannot just target something that is providing you, I told it already, like risk to reward is the first and most important thing that you need to look. Let's say your stop loss is 25 handles or pips, however you look into your stop loss. Okay, and you're targeting a take profit like this much, it's 0.65%. okay, what gonna happen if you lose this and later on you win a trade like this? Okay, now you will see a lot of people are giving you examples or trying to cheat you with those sort of thing, but I don't really want to like, I'm not here to give you guys any comparison between others and me. I'm just here to give you some set rules. Okay, if you have set rules, if you start back testing and forward testing with that set rule, you will see the result. If you don't have a set rule, how would you know like how much you can gain or lose in a single trade if you don't have a set rule? I have a set rule, I don't risk more than 1% and I target 1 to 2, so risk to reward is 1:2, as simple as that. Okay, I don't want to target sometimes this, sometimes that, and then if I lose I have to recover it in 10 trades or sometimes 20 trades, and during that if I lose one more time I'll be messed up. Okay, this is how people actually lose their account. But anyway, so if you are trading in 1 minute, you should look into this. Now You will always have your bias from the higher time frame, like 1 week and 1 day. Why I said this is because if you have the bias, let's say on the day I have my bias that market is gonna grab the sell side liquidity, that's why when I found my silver bullet setup that is aligning with the sell side, I showed you, like I took that entry, as simple as that. Now took that entry means I showed you the execution process, and if I was looking into the chart during that moment, like that specific area, I might have took the entry, as simple as that. Now this bias will always be there, but let's say you are trading into a 1 hour or 4 hour chart, then this will be your higher time frame that you will do your analysis and then try to execute. So wherever you are executing, this is how the time frame you're gonna choose. Now why I'm showing you this is because mostly you will see I look into 15 minutes. Yeah, 4 hours was my favorite, to be honest. Like there can be another higher time frame in between. Let's say you trade into a let me give you one by one. Okay, so let's see, your lower time frame is 5 minutes. Now a lot of people will say it doesn't work or give you those sort of thing in 5 minutes. Yes, it does, and that's what, like 5 minutes gonna make you, instead of day trader, it gonna make you a swing trader. They're like you gonna hold your trade for longer, not 5 minutes, maybe 15 minutes, 1 hour. If you choose those time frame, it gonna give you like that. Okay, it gonna take long times to find a setup, and it gonna give you like it gonna take even longer to give you a take profit or something. That's why people mostly focus on like the day traders who trades in the same day, exits in on the same day traders, and maybe they trades multiple times in a day, or maybe just one winning trade and they stop trading for the day. As simple as that. Okay, 5 minutes you can look into, 15 minutes can be your midpoint. Okay, but if I were you, I would look for 1 hour. If I'm trading on 5 minutes, 1 hour, and then 4 hours. Still I'm getting notifications. Anyway, now 15 minutes you look here. Okay, I'm just writing there, but you look there. Okay, and just a sec, let me make it bigger so that you can understand. That's the highest I can go. This is a time frame as well, but I'm keeping it here because no one gonna, like I think most of the people who are gonna trade, they're gonna look into the 1 minute candle or maybe 2-3 minutes candle. Okay, so this time frame is applicable for your 2 minutes and 3 minutes as well. Like anything lower than 5 minutes, you can use these 3 time frames. Now on 15 minutes, your higher will be 4 hours, like immediate higher will be 4 hours, and your highest time frame or higher time frame where your most of the analysis will come will be like 1 day. Okay, 1 day. This is what I'm giving you. Hi Remigius, how are you, brother? Good to see you here, although like I already streamed for maybe 1.5 hours or 2 hours, but thanks a lot for coming and joining me. So this is what you need. You will keep this in mind. Like what I do, I go to the daily, I just have, oh come on, I hope my internet is not bad. One more time, living in Australia is still facing this. It's disrespectful, it's shameful. Okay, where am I? In Nasdaq, I don't know. Anyway, so what you gonna do, let me go to ES where I usually trade. Okay, so what I saw here yesterday, price closed, like took the buy side liquidity that was due, like from here, and then fine. And you, yeah brother, I'm doing great. Although like recently I'm being little upset, that's why I'm not uploading proper videos in my channel, also on my like I'm not doing the lives regularly because what's happening around the world. Okay, whenever I turn on my social media or look into my social media, I can see like it's, I'm talking about, I hope you already know, like Palestine, Israel. No matter what's happening, who's right, who's wrong, I don't know. But like why I'm saying this is because I don't want any controversy. Everyone knows what's happening over there. I But when I see like kids are suffering, like innocent people are dying, that's making me upset every day. So mentally I'm not in a state over there, but physically or in other forms, yes, I'm doing really good. Thanks a lot for asking. Anyway, so what I was saying here is, I told on my previous streams how I look into liquidity. Since Remigius is here little late, I'm gonna say again. So it closed here above, and I also told them until I see a bearish reaction and see price is most probably going for this sort of liquidity. So until I see any sort of bearish reversal pattern or anything, I'm not gonna go for a downwards bias, and that's what price is giving from this. I talked about all this. Now look here what happened here. Price closed above. This is inside, it didn't take the sell side or the buy side during this day, but still the bias was higher upside. After the inside, this candle ultimately took that, closed above. Now what happened yesterday? Yesterday price closed below. Okay, so since it closed below, my bias for today is this low, but since price took that, like took that high, if it just closes below this high, that will be good enough for me. Okay, that will be good enough for me to give me the confirmation that market will go lower eventually, since that will be double confirmation. Okay, but forget about all those things. Let me get back to the place where I was actually drawing all these. Where is it? On the NQ. It's a stressful. Where is it? Okay, here. That's why you need your higher time frame analysis. Okay, and on the weekly you will find the same thing, that on the previous week market closed above the previous week's candle, and this week it already took the liquidity from the previous week's high. Now depending on where this week's close, but what is my bias it's giving me for this week is the buy side, and that's what price delivering. Now where can it reverse? I can look into 1 day. Okay, what ICT said is 1 day is the time frame where you gonna have all your analysis or most of your analysis. Okay, like you want to spend most of your time on 1 day. That's what ICT said over and over again. Anyway, so what I'm saying here is, if you are trading into a 1 minute time frame, unless you are like targeting a daily swing high to daily swing low, things like that, then you can go and look into other time frames. Usually this setup is more than good enough for you to get that silver bullet entries and profits as well. Okay, I usually look into the 15 minutes, as simple as that. I highly, like very few times I go to 1 hour. Yes, I love to go to 4 hours before going to 15 minutes and 1 minute, but problem with 4 hours is it doesn't align with my DXY time. Okay, if you see on the DXY, let me reset the chart here. On the 4 hours, let me go 4 hours first. On DXY I have 2 hours 28 minutes and 17 seconds left for this candle to close, but on ES you will see I have only 1 hour 18 minutes and 6 seconds to go. Okay, 1 hour 28 minutes. So this candle has 1 extra hour than the DXY candle. Okay, like 1 extra hour means it started 1 hour before the DXY candle started. That's why DXY's 4 hour is 2 hours 27 minutes, and that's why ES or NQ they all have 1 hour and 27 minutes. I hope you can see that. and that is actually the reason ICT don't look into 4 hours in most of the time. Okay, why? Because it doesn't align, it doesn't align with the DXY. So if you are expecting, if you are seeing a bullish candle on DXY and a bullish candle on NQ or ES as well on the 4 hour, there might be some conflict like that, but on the hourly it can somewhat clear that conflict. Okay, why? Is because, come on, am I already no, today is not a good day for streaming anyway. So the 1 hour is 27 minutes, on DXY it will be the same, like 27 minutes. See here, it's the same time and it's giving you the same sort of reaction in 1 hour. It's going higher here, and on NQ or ESZ it's going lower. That's why I'm saying I cannot use especially for this. But if I'm looking into the forex, I don't even need to look for DXY, to be honest. As simple as that, cause my favorite pair is GBP AUD. As simple as that. I don't trade the Euro USD or GBP Euro GBP things like that much. I like GBP AUD. I mostly try to trade there anyway. So what I was saying here is, you don't need to look into the same thing over and over again. First day or before the new week starts, okay, you just draw your major levels, then find where the starting or opening gaps or volume imbalance, if there is any. If there is anything like that, you consider where can possibly price go, and based on the candle close you can also mark the previous week's high and low, and then you can consider where you are looking that market gonna go and grab the liquidity. And after grabbing liquidity, it can do whatever it wants to do. It's I really don't need to look into that. Okay, that direction will be my bias, as simple as that. Anyway, you try this. Okay, you try this, you look into these 3 time frames like this. Wherever what is your lower time frame, look into. Okay, let me just hide the candles on the left, it's giving me headache. Okay, this is your execution time frame, this is your mid time frame, where you can look for possible what it calls possible point of interest, like fair value gaps, maybe a breaker block, maybe order block, like PDRS. Okay, and then the 1 hour is where you can do your higher time frame analysis for a 1 minute execution. You don't really need to start from a weekly to a daily to a 4 hour to a 1 hour, a 15 minute. Like, you don't really need that. I saw people like even goes to 5 minutes, and then they do their they mark some fair value gaps or order blocks, things like that, and then they jumps between those 2 time frames over and over again. If I had to jump, what I can do is, if 1 minute is not giving me any good setup or fair value, let's say market is continuously going lower, but there is not a single fair value in 1 minute. Okay, in 1 minute it's going lower like crazy. Okay, it's going lower straight like this, but there is no fair value. It's like there is a week first going up, then the body is coming lower. It's a week going up, body is coming lower. There is no fair value in 1 minute, but it's falling like crazy. That is the moment you will look for your higher, like 2 minutes or 3 minutes thing. If you don't have 2 minutes, go to 3 minutes, it's okay. If you don't believe me, just watch the very first video from ICT 2022 mentorship. Okay, very first means the first one, he was actually just giving some introductions, but the first lecture or lesson where he is talking about these things was this one. Okay, mentorship episode 2 was this one. I'm not gonna give you the examples over and over again every single day. Was this one, you will find what he's talking about. Later one, what happened, I don't know, I don't need to know. Okay, because ICT, everyone is trying to learn this shit. Okay, the 2022 mentorship. People are not here to learn what ICT said in 2023 mentorship. Yes, if you can learn this, there are a few new things that he introduced, or he redefined few things over here as well. I remember I had an argument with my friend T2, or you guys know, like ICT trading concept. We had an argument regarding the market maker model where he was talking about the mean threshold. I found the exact same thing in several places. He's talking about the body. Okay, now T2 also showed me two or three places where he's talking about the candle. Okay, and on my video I also said, like on my live during that day, if you were here, I also said, like, if he meant the candle, then he unintentionally made a mistake by saying body over here. Okay, and I found it few other places as well. That's why I was asking T2 in his live way before ICT uploaded that market maker model video. Okay, if you guys remember from T2's stream, you may. If not, I cannot remember at what day or what stream I asked him, because he streams 3-4 times a day, so I don't know actually at what part of the stream I asked. Anyway, I found so many things like that. Now there is a conflict between me and my friend. What is the conflict? What is the mean threshold? Should I take the candle as my, like, whole candle and the midpoint, that is my mean threshold, or should I take the candle's body as my mean threshold? ICT said the both thing in different places. Okay, now even though the concept is same, there is another thing that ICT said multiple times, and all other YouTubers or all other people who follows ICT trading strategy or concept, like ICT himself, they all says one thing, and one place where they agrees is candles opening and closing is the most important thing that you should look into. Okay, and whatever happens after that, like with the wick causes the damage. Wick is the damage causing part of a candle. It's not something that you should consider to look into. We can go below a mean threshold, but if the body is not going below, it's showing respect to that midpoint. Are you, like, whoever here, do you guys agree with that part, that if the body is not closing below the midpoint, that is where price is respecting that midpoint? Is it what you heard from everyone? If that is what you heard from everyone, what is the most important part of a candle? As simple, like, even though T2 showed me that yes, he said candle as well about the mean threshold in many places, you will see reactions as well from the candles, like high to low, and if you put the midpoint as your mean threshold, you will see reactions as well. Okay, I'm not gonna say you won't see that reaction, but the same thing, if you see from your candles opening to closing price or body, okay, that midpoint, will it make you more happy to see a reaction from here, or it will make you more happy to see a reaction from a mean threshold that has a lower wick or maybe higher wick, and then it becomes around this area? Where will you be the happiest person? Okay, body tells the story, wicks do the damage. Thank you, Remigius brother, thanks a lot. And that's why I'm saying, since ICT talked about both of these things, like he said in few places that the body, the midpoint is your mean threshold, and few places the candle, the midpoint is your mean threshold. I personally think, like, there is only one place where every single person has the same opinion, which is like the body tells the story, the wicks cause the damage or something like that. So I already know that the important part is the body, so I'm gonna look into the mean threshold with my candle's body, no matter what. Even ICT, if ICT himself comes and says, I'm not gonna change from my bias. Why is that? Is because sometimes you will see there is a wick like this. Okay, now this specific this area, okay, let me just delete this. So specific this area, the wick of the candle, if there is a long wick, this area has a lot of other things on a lower time frame than the current time frame you are looking into this wick. Okay, let's say it's in a 1 hour, I have a huge wick like this on the lower part. If you go to maybe 15 minutes or 5 minutes, you will find fair value gaps, you will find order block, lot of things inside of this wick. So this is itself a very important area. Now you want to draw your mean threshold like this. Yes, you will see reaction from this level, but you will see reaction from, like, now you tell me what is more acceptable to you, that a price coming and respecting from this area, or a price coming and respecting from this area, the lower part of the body of the candle that is telling you the story. This is why I said I'm gonna stick with the body. Okay, don't get me wrong, I'm not saying my friend is wrong or ICT is like making me confused or giving different views on his own theory. No, not like that, but this is what makes more sense to me. Now let's say there is very small wick on the lower side but a huge wick on the upper side. Okay, you know that huge wick on any side, that is itself a story. Here inside of this you will find imbalance, you will find a lot of other things. Now you want to consider mean threshold up here, or you want to consider mean threshold that actually makes sense, that is coming from the most important part of the candle. This is why, anyway, I'm not here to make people confused or anything. What I'm saying here is, if you are here to learn from me, I will say, I already told you what sort of silver bullet and what sort of movement I expect from a market during the silver bullet. Now since Remigius, I think he didn't he was not here, and I already on my previous stream showed you guys this indicator. Okay, this ICT kill zone and pivot point. If you are not here other day, why I use this indicator from the trade for what it calls, trade or OPP or something, this specific name you can look, or you can keep it like you can write it down somewhere. This one I already showed the settings on my previous day's stream, which I did like couple of days ago, like the stream I did before this stream, today's stream. Okay, I showed all the settings and things, and I also need to go watch that settings as well, because this one got messed up, that's why I'm not showing here. Anyway, so like I accidentally removed it and auto saved the chart, that's why I need to fix it one more time. So what I do is I just look into the kill zone, mark the high and low. If you are trading during the London session, if that suits you, you're gonna mark the Asia sessions high, Asia sessions low, and you go to 15 minutes or maybe 1 hour, you look for nearest relative equal. Okay, so only you look for the nearest relative equal on the left on the higher time frame. Okay, why I'm saying this is because, like, relative equal means, now I have a personal observation. Okay, now let's talk about this as well. If you see, there is 3 highs like this. Okay, maybe price is coming up from a point, whatever it is, and then it started going lower and took some sell side liquidity, and now you are expecting price to take this sort of liquidity. My suggestion, this is my personal observation. Okay, I might be wrong, if there might be some very good people who can teach you other things as well. If you see this sort of structure, never target this one. Okay, yes, price can go there, but never target this one. Always try to at least like take partial around the lows, not the highs. Okay, not the highs, around the lows, at least this low. This low will be a very important low. Why this low will be a very important? Because that is where market gonna react on the other swing high as well. But anyway, mark the lowest candle over here. Okay, the breaker block or mitigation block, however, like whatever you can find around that area, mark that, mark the middle high, target this one instead of the highest. You will see a lot of time price from here gave a possible reversal, and then maybe later on it came and grabbed that new liquidity. So what price gonna do when it gonna grab the liquidity is it gonna come higher, first take this liquidity, come lower, or maybe respect somewhat around this area, then it gonna take this liquidity, come very close to that liquidity, and then it gonna go for the sell side one more time. Okay, or maybe some relative equals or whatever the imbalances it created there, it gonna go for that. If you are not stopped out during that move, you will see later on market gonna go and grab these relative equals like this. Mark this, if there is three highs, like three swing highs that are like that have little bit of a space or room for the price, this is where price gonna take its liquidity, go very close to the highest level, and it gonna react from there. Okay, and I'm saying this to you now, you look for those structures, you mark those structures. If it's not equals or relative equals, like it's a very close liquidity level like this. Okay, I'm saying if it's something like this that you are currently looking at. Okay, like you I hope you got my point. Anyway, so what I'm saying is during the silver bullet, so since I trade mostly London will be your 3 a.m. 3 a.m. to 4 a.m. midnight. You go to your indicator, mark the Asia session high and low, like the kill zone high and low. Okay, kill zone high and low, wait for price to take any of those liquidities. If your bias is on the upper side from your daily or weekly analysis, you will look towards that. If you find a setup towards that, it will be a very high probability. Okay, because you are with the trend. Number one, I'm actually teaching you what I look into or how I enter into my silver bullets. Okay, remember that. So it's only, oh shit. So it's only during the time that I already gave you earlier, silver bullet. I'm saying again, it's during the London silver bullet or London session, it's 3 a.m. to 4 a.m. Okay, during that moment, you maybe it can happen before the silver bullet. Okay, the liquidity raid, it can happen before, but you enter only during that time. If your entry is during that, right when the 3 a.m. candle starts, if that is when you are getting the entry before it's 4 a.m., you take that entry. If it's not giving you any entry during that session, you wait. Okay, you don't enter unless you are very sure about that. If price comes here, I'm gonna go, like I already talked about it. Remedios, you were not here maybe, so that's why I'm actually repeating this. So unless you are sure, like very sure about that, maybe don't risk the full amount that you usually risk a little less, and then target the closest liquidity with the same entry point that you are marking before. Let's say this is a fair value gap that you are marking. Price came after the silver bullet session, so you still wants to enter here. Enter with a smaller risk, not full risk that you usually take. That's one thing. Now what I was saying is, whatever side price took the liquidity from, okay, let's say it is, or maybe during the silver bullet you just came, opened your chart, you see like it didn't take the high or low, it's close to that level. Okay, it's close to any of those levels, buy side or sell side. Okay, let me make a buy side and let me make a sell side. Okay, let's say price is very, oh shit, I had it selected, how come the same thing turned into a sell side and into a buy side? What is these arrows? Okay, so wherever currently price is, okay, so let's assume that price is here. You are expecting price to take this first, before going lower. And if you see on the left with this high, there are some relative equal highs or a higher time frame point of interest sitting right above this high. That's your high probability. Okay, I'm talking about high probability. What you're gonna do is you're gonna see how price, like after taking the liquidity from here on that higher time frame point of interest, if price is giving you a move like this or not. If always it won't be like this clean. Okay, sometimes what price can do is price can go here, the next time it can come like it can displace, there might be fair value gaps, it can come to there, or maybe it came close to that candle and then it started giving. So what you do is you mark your market break of a structure. This is a break of structure. Okay, I'm not marking it as my market structure shift or change of character or anything like that. I'm marking it as a break of structure. Remember what I'm saying here. And then I'm looking if it is creating any fair value here. That maybe if there is no fair value, there will be other areas. That's what I'm talking about. How I look into a setup. That's what I'm saying here. Okay, so if there is a fair value, I will try to enter into that area, like with my OTZ. Remember my OTZ, like this. Or if price is going lower from here and creating a smaller highs, I create my I look into my OTZ. Let's say this is where price is going. It gave I cannot, I need to select another one. Okay, it gave a market structure what it calls the retracement like this. It didn't reach with my OTZ, or like OTZ you will see it will align with some fair value gaps over here, and then it's going lower and the low is still here. Remember, that's your low. It's even going lower like this. Maybe there are fair value gaps that it respecting. You simply draw and drag your OTZ until like it takes that liquidity wherever. I already showed it, but let's say it came this lower. Okay, and then it came back here and then again started pulling back. You drag from that point to this point like this. Again it didn't go there, it came here, it came here, still it didn't take that liquidity. Go higher like this. You drag your OTZ from there to there. Why I'm saying this is important. Okay, if what sort of liquidity you're targeting, it's not just your Asia sessions low. You will find that there is already some relative equal lows on the left that price left from the previous day, or even the midnight, like 12 AM or whatever the market opened during that. Okay, from 6 PM New York time until that 2 AM, there will be so many liquidities on the left or right that is still due. You will find setups like that. I already showed this on my previous stream. Like previous means today, before breaking or losing the internet connection, I already showed it. You will find setups like that. So you draw your OTZ from whenever it breaks a structure, like gives you that break of structure or market structure shift, those things. You drag from that to the first retracement. You look into your OTZ, you see if there is any fair value, or like if there is any PDRA that is your that is aligning or not. First thing first, if it's aligning, you will try to enter into the one that is aligning the most or the better way. If it's between this 6.2 and 6.7 on level, you will enter you will put on that fair value gap. Low will be your entry point. If it's aligning with the 7 on 7.9, that fair value gaps low will be your entry point. As simple as that. A stop loss at 1, target first of all. If you see that it's coming like very quick, if it's very quick to come back, most of the time you will see it not gonna come to your OTZ like this. It gonna go lower. Okay, it gonna go lower from here until here, and then it can come to your OTZ. Okay, maybe this low was little, it can be there because that was not your OTZ during that moment. Remember, when price was here, it was not your OTZ. So that level still can be there, even it's a better option, because when price takes a recent swing high inside of a move and above that there is a imbalance or something, that is a better option because it already grabbed the possible liquidity on its way up. Okay, this is called inducement. I'm talking over and over again regarding this. So during that inducement, it gives even better probability of going lower from that fair value gap. Anyway, so you drag like this. If it reaches, good. No, if not, you drag here. Whatever aligns the most with your these two levels, that is your entry point, and that's where you are entering and targeting that sell side. Now what I usually do is, if I enter from a OTC, that one or the highest level, this is one, remember, let me just change this. Okay, so, and let me drag it a little towards the right on the clean side. So that one becomes my stop loss. Let's say I entered on the fair value gap, or a fair value gap around this area that aligns with my OTC. Especially you want to see into this move. Okay, that's your special that's your first move or area where you are looking for your entries. You want to see whatever is in this move. Okay, when price is there, you first target 1 to 2, no matter what. You stick with your 1 to 2 until you learn the thing properly. Okay, until you see how price, like you have a vision or you have a view that price gonna go lower. I already showed you that the video I was editing during this moment. Although this move already took my Asia sessions low, I had the confidence that price gonna come here, respect from this area, and you see, like, there are lots of fair value gaps. None of them I targeted. There are fair value gaps that price is coming from here, price is coming from kinda a fair value gap, and that order block, you already know how I mark my fair value with the order block or with a volume imbalance if you are here from the beginning. So it's coming from there, it came lower, it took that liquidity on that red line. Okay, there was the Asia sessions low that it took, and then it came even lower, it started going up, but still I wanted to enter into a trade from that OTC because that area was never retested. First of all, there is some balance price range over there, small little, that black line is the starting of the balance price range, and that ashes or ash color line, that is your high of the balance price range. Price came inside that, that's where I entered, not here. Okay, it's let me see, like, if that was the case or not. I already showed you, right, my entry, like the OTC and the alignment, whatever it is. Anyway, so what I'm showing here is, like, even though it took the liquidity, I saw better liquidity around this area. Remember I showed you on the NQ on my today's previous stream, if it's not one stream. Murad Hossain, if there isn't any fair value, then what? If there isn't any fair value, okay, and only the body is real, okay. So if there is a what happened, session died, I don't know what happened over there. Anyway, so you enter like that. Let's say there is no fair value, then what? This is it again doing this. I'm gonna finish the stream very soon. Okay, I'm sorry guys, my internet is messing everything up. So what I'm saying here is, usually for silver bullet I always target 1 to 2. Let's say sometimes this sell side and the, like, stop loss, take profit, whatever it is, like, if you are good enough with your stop losses, you can target more, because if you can put those strict stop losses, like the fair value gap candles high, the mostly you want to put on the third candle's high. Okay, not the candle that has the fair value. The third candle's high is kind of safe, but for the silver bullet I mostly focus on the OT. Okay, OTZ or OT, optimal trading zone or optimal trade entry. Now how these levels came, I have a very good video for that. I'll give you guys some of this later on, not today. However, So you target that 1 to 2. If this sell side is not covering your 1 to 2, you can still go for 1 to 2, as simple as that, because if you are trading into OTC, that 0.27 is mostly where we expect price to go. And if I think, like, from, let me put a mark like this. Let's say I entered on a 6-2 level, because it will always be the same for every single person, whoever is entering at least from this 6-2. The higher you go, the risk to reward will increase or improve. So this is your 2.34. Oh my god, now I'm hungry. Okay, and now my internet is again doing the same shit. Anyway, so why is because sometimes I saw price comes very close to this area. This is my observation, okay, don't get it for granted or take it for granted. It comes very close to this area, and then it goes up higher, gives you some sort of heart attack, and then it comes back. All this time, if your psychology, or if you are not like very strict with it, with a strong psychology that no matter what I'm gonna target this, things like that, you will be panicked, you will do or make some mistakes. So if you want to avoid that small little thing, sometimes you will see price actually reversed from a like area like this, very close to the 27. Anyway, 1 to 2 is what I target. I target like that. If the stop loss is not giving me that, I will go like that. Now what I was saying is, even if you don't want to go for that, target that low, that 0 that you are marking your OT from, that gonna always give you something like this. This is still a very good thing to have, because if you lose a trade, on the next trade you will recover that loss, and you will have that 0.64% as your profit. Okay, so it's still, anything like that will be still considerable. Okay, anything above 1.5 will be considerable. Why I'm saying this is because if you lose 2 back-to-back trades, winning one will cover that, but you need to still win 2 back-to-back. Now let's say you win 1. Okay, why I'm saying 1.5? You lost 2 back-to-back trades with 1% risk. Okay, you lost 2%. Now if you target 1.5 all the time, you win one trade, that will give you 1.5% return. So you lost 2%, you got 1.5%. now you still have 0.5% in your losing side. Okay, if you let's say you lost again. Okay, first of all, if this is happening to you, like winning 1 and losing 3-4, you should reconsider before trading. You need to learn more. Okay, that's the first thing, because your winning ratio is not good. But anyway, let's continue with the example. You have 0.5% in your losing side, you lost another 1% on your next trade, so now you have 1.5% in your losing trade. If the next trade you win, it's your break even moment. Okay, you didn't lose any, you didn't win any, but your break even. If it goes lower than 1.5, this is where you need to have a very high win rate strategy that can give you like more wins than losses if you go lower than that. That's why I'm saying, like, this 0 will always give you something like 1.64 or 65, which is a very good thing to have. And depending on where is your fair value, you will see like the fair value is actually in the middle, somewhere around this area, so you will enter on the low. Now if you are entering there, that 0 is becoming your 1.88. if you are entering from the higher part, it will become your 2.5. the higher you go, your stop loss is not moving, remember, it's always there, just your entry point based on where is your what it's called, where is your point of interest or imbalance or whatever it is. Okay, so this is how you get your entry and exit. Now why I said 1.1:2 is because, let's say I entered here, that's already my 1:2, but my sell side is here. I can consider this, but of course I'm gonna take my first, like it's a 2.71, I'm gonna take my first partial or some profit out at 1 to 2, or at least at this low, as simple as that. This is how I manage my trade. Okay, and this is how I keep that what it calls my winning day streak. If you see my channel, I posted few things over there. This is how I keep those streaks. Like let's say I closed half of the points over here, I risk only 1%. Okay, at 1 to 2, like think this way guys, I risk 1%, I closed 50% or like 50% of my position, which is like, let's say like my 1% is $500. That's what I risk. So let's say I closed, I target what, 1 to 2 minimum, so that's $1,000 if the full position reaches to my take profit. Now this is what I risk, this is what I target. If it goes to that 1 to 2, let's say my target is now higher than that. If it goes to 1 to 2, I have now 1000 in profit, but let's say my target is now something higher than 1 to 2. Now in this case around $1,500 range. Okay, in dollar I'm giving you the example. What I do is during this moment I take half of my position off. Now I have $500 profit in my place. I didn't move anything else. Okay, I didn't move anything. I have $500 profit, but since I took half of my position off, what my loss will be right now, like what my risk will be right now, it will be $250. Now why I don't consider moving it is because it can come and then go. I don't mind, it can come to the break even level or retest the same entry point one more time. You saw that happening so many times. That's why I don't try to like move it to the break even. I keep it as a runner, or maybe if there is a very good level that I can think above my break even, like I can think even if price comes back here, it will never go here or it won't go here before taking that liquidity. I will just move that much. I won't even move to the break even here. Now from 250 I can reduce a little more less as well. Remember I have $500 profit. I'm now risking 250 and targeting that same range with half of my position. So with that other half I'm gonna make another $750. Okay, why 750? Because that's half of my $1,500 run. As simple as that. Another 750 together I'm gonna make, instead of 1500 I'm gonna make 1250. You will see lot of the time I have something above 1200, something like this. It's because of this. Now what if price goes above and stops me out? I didn't, like let's say I didn't even move my stop loss. I'm gonna get out or exit out with $250 loss for my rest of the positions. But how much I secured? $500. I still have $250 in my profit. Okay, and then I let the market do its job. If it goes higher, stops me out, I still have $250 profit in my bank or in my account. If it goes lower, I will get another $750. That's the easiest and simplest way I can explain you that entry exit thing that I personally focus into. Okay, I hope it made sense to you guys, and that's why I focus into my risk to reward. As simple as that. And now let me come to the point. Okay, this is what I was about to show you, and then I actually got is this Nasdaq? Oh shit, where is the other drawing that I had before? Oh, I removed it anyway, so let me remove everything from here. Now let me give you that OTE. Okay, what if there is nothing? This is pay very clean attention to this part. Okay, this will be the thing that you want to know or learn. Now the midpoint I want to put like this. I want to put this and maybe a thin area. Actually dark like this is looking very bad, so okay, let's say this is, remember what I said here before, but I'm gonna write one more time. Higher time frame swing, oh shit, swing high. Okay, and I'm gonna copy this, not like that, come on. And this is my higher time frame swing low. This is the dealing range. Okay, let's say on the daily or on the hourly, and since I'm looking into, I already gave you the time frame that I want to see my things, right? 1 hour, from 1 hour 15 minutes, 15 minutes to 1 minute, based on wherever you are trading. I don't trade into seconds, so let me minimize that. So from here I focus 1 minute, 15 minute, 1 hour, done. If I'm trading on 5 minutes, 5 minute, 1 hour as my mid time frame or medium level time frame, yes, I can still use the 15 minutes, but 1 hour is that, 4 hour is my higher time frame or something. I already gave you that. It's up to you. Okay, you don't need to go for a 1 minute like trading strategy or something, scalping. It's 1 minute is scalping anyway. Okay, so all the day traders, they are doing scalping. People will say a lot of things about their models, but they don't even know the meaning of scalping. Okay, you are entering into a market, within couple of minutes you are making your money. That's not a trade, or that's not a strategy. That's not even ICT's like earlier stages he started like that. The higher you go, the better it is for you, because if you go there, it gonna take longer time to form a setup. It gonna save a lot of your losses. If you are seeing lots of losses, go trade 3 minutes or 5 minutes, or if possible 15 minutes. Look for those setups on 15 minutes, and then sell short, buy long, whatever you can find depending on your market bias. You will see the result, you will see the change in you. Okay, anyway, so this is your higher time frame swing high, higher time frame swing low. Okay, now what is this? The upper part is your discount. Okay, sorry, upper part is your premium. So I'm expecting a premium here. I'm just gonna write short so that it can be easier for me. Okay, so this is the discount area and this is the premium area. Okay, the upper part and the lower part. PD arrays. What are the arrays now? Let's come to that. What if there is no fair value gap? I'm gonna give you what ICT gave me. Okay, you want to, that's your old swing high and old swing low. Okay, now you want to see to your old swing I'm just gonna write like low or high. Okay, or L/H. You understand, I'm saying it with my when I'm writing. So it's old, low, high. That's one. Number two is rejection block, or is ECTION block. Number three, bearish. Okay, remember I'm in the premium. Okay, bearish order block. I hope, let me actually make it shortcut, because order block OB, you guys understand that, so I don't really need to write. I'm coming. Okay, now FVG, fair value gap, because it's gonna take otherwise a long time. Okay, BREAKER BLOCK. Now there is another thing that I missed, but I have, like, don't ask me what that is, because I still need to make that concept clear. Okay, this is called what was it? Liquid dirty void, bro. Okay, just give me a second, guys. I hope you are still watching. Okay, so if you are watching, METIGATION mitigation block. I hope you can see these options. Okay, and now I should have, okay, let me make a copy, because it's not actually allowing me to midpoint, turn it off, border. I don't really need the border or background. However, I need the text to be pure white, larger font, bold, and now I think I can drag it according to my wish. Okay, the reason I'm putting it here like this, okay, why is it not selecting? Why is it not selecting? Or sorry guys, it's really necessary, that's why I'm actually wasting your time and doing this good looking thing. Okay, it's necessary, that's why I'm doing it. Wait and watch how I use it. Okay, and now I need to get a copy on the other side, but the order I need to change. Okay, this is why I said like it's necessary. So now this comes here, and instead of low or high, it becomes my high or low. Okay, the instead of, oh, it's not mitigation, it's actually mitigation, so ME. Okay, and here it's okay, I hope you understand what I'm trying to say here. Okay, mitigation block, let me come from the top, it will be easier for me. So X, let's go here. Yeah, so let's go there, although the gap is changing. Let's go above that rejection. Now what do I have? A liquidity void. Let's go above that. I really don't know about the liquidity void, like don't know means I have very less idea about that since I never used it. Okay, but I'm gonna make things clear to you guys, just bear with me. Okay, please don't leave until I'm done with this thing. Okay, so liquidity void, after I like above that I will see a, okay, so the low should be my this rejection block. Okay, I put it above the bearish order block anyway. It's not a problem, I can fix that. You know what, I'm just fucking I'm making it, I can write it even faster what I'm doing over there. BLOCK. Okay, mitigation block, then breaker block, or I could simply write BB anyway, then FVG, then LIQ lick void, then it should be bullish OB, then it should be RJ block, then or R block, whatever you write it, and then alt high slash low. Okay, or simply I can write old low since it's coming towards the low. Okay, so now let's talk about this, how you enter into a trade in a specific range. Okay, you want to always enter into a trade inside of a, like for a short entry, I already talked about this. So what you are looking here is a higher time frame. Let's say in 1 hour this is the highest point that price went. Okay, so market, you can see like from a come on, so from a swing low, okay, let's say this is a swing low, it was coming something from this area. Okay, but I will fix it. From a swing low, you see price is going up, creating some structures like this. Okay, like this means on the I'm drawing the smaller time frame. Okay, like this. This is, or maybe I can just go straight to this area. You will see something like this happening, and then it's coming towards your sell side. Okay, this low is your sell side, and okay, so this low is your sell side liquidity sitting right this area, and that's your buy side liquidity. Now what you expect from this area is price, this is above the 50% or equilibrium level. You expect that price will give you a sell side delivery, and this is where you want to look for your buy longs. Okay, if you simply inverse that chart, okay, this chart, this is where, so whatever the move I showed here on the higher time frame, it may look something more clear, like more something like this. Okay, less of the movements, maybe something like this. Okay, so from that swing low to that swing high, or the higher time frame measured low or high, you draw this, you come to the lower time frame, that is where you want to see your market structure like this. When it's above this equilibrium, when it's premium, that's when you try to sell short. When it's coming from, let's say it's already coming from the low towards the higher side, your bias is higher up there. Okay, in this time you want to, this is your discount, right? So you want to buy long from your discount, sell short from your what it calls premium. Now what you want to look when price is above that equilibrium, what you want to look for? First you want to look for your mitigation block. If you are not famous, or if you don't have the idea about mitigation block, you want to look for, now let me, like, that's what you want to look when price is above that 50% level. Okay, so let me draw the lower time frame one more time. Let's say this is price coming inside that 50%, then it's doing something like this. Now you don't know if it gonna go to that high or not, okay, that highest level or not, but when it's going up, what can be your possible entries if there is no fair value? Okay, that was the question, like what if there is no fair value? Remember this thing. Okay, how many I have definitions I have given you and expectations I have given you. You have the bearish order block, you will have the bearish breaker block. Okay, you will have the fair value gap, you will have the rejection block. Today on the first part I already talked about the rejection block. Now why ICT said you don't need everything that I'm teaching you, you will need to master at least one of them to become a profitable trader with ICT trading concept. If you don't believe me, go watch ICT's videos. I am done giving you guys proofs, and I am not gonna give you guys any sort of anything. Like, if you are here to learn from me, you need to trust what I am saying. I don't need to prove every time, like give you guys why this or that, where did I get it from. I am done with that. Okay, I have shown you guys enough of that. I'm done. If you are here to learn from me, you need to trust my process. Okay, I'm trading on a simple, like I'm trading on a regular account every single day. When I have a trade execution video or whatever I'm showing you guys here, I'm trading from a, you see TradeOvet is connected. I'm not connected with any fucking paper trading or anything. Okay, now lot of people will have a lot of issues with that word, but I'm sorry. Okay, I'm sorry, I'm done with that. Anyway, what I'm saying here is, whenever it's above that line, okay, I saw some people are saying show me someone who can trade like the premium and discount for 3 days or 2 days. Yes, I heard that. Okay, every day I'm trading with that OTZ, optimal trading zone. What the fuck that means? Just give me, like, I'm getting angry again. I'm sorry guys. High to low, I'm drawing a optimal trading zone every single day. I'm entering into that 6-2 level. Is it in premium or is it in discount for a sell short? Is it in premium or is it in discount? Let's say that's my move, and that is how far I'm looking into. Where is it from the 1 to 0? Okay, where is that 6-2 level? It's above, inside of my premium, or it's inside in the discount? Where am I entering into a trade every single day that I have posted on my YouTube channel, that I still am under the process of editing? Where is it? Is it premium or is it discounted? Because I'm selling short, it's premium, it's inside the premium. Now when I'm buying long, what I'm doing with that? Okay, what I'm doing with that when I'm buying long? So that's my 0 or a starting point. Price is expected to go up there, like this is how far it went. Now I'm expecting a retracement to my area. What is that area sitting with? Premium or discount? So where am I entering every day with my long entries? Inside of the discounted price, or inside like somewhat random inside of a premium or maybe equilibrium, some random places? Where am I entering? Anyway, so 3 days I have videos over month in my channel with trade executions. You watch that, you will find if 3 days people are actually doing that or not. Anyway, what I'm saying here is, when price is here, you start with your mitigation block. Now I have to personally backtest my mitigation block things, or learn a lot about these things. I don't want this. I know breaker block, I look into breaker block. Okay, so first thing is, above that 50% level you look for mitigation block. Okay, I have some idea, but I never actually back tested or looked into possible levels that market, if it's violated, market can go higher, things like that. Okay, and also I don't know where exactly the stop loss should be if a entry from mitigation block is happening. I didn't backtest or forward test that. That's why I'm saying I don't want to use mitigation block. You will not always find a mitigation block around that level as well. Okay, that's according to ICT. Now where did I get it from? I will give you the link on last time as well. Okay, this is the last time I'm gonna give you where did I get this from. Exactly this. Okay, exactly this, where did I get it from. Now price will give you entry on the mitigation, and since I don't trade it, I'm gonna skip this part straight away. Breaker block, that can be your possible entry above that 50%. If you cannot find a proper breaker block, you will find, like, whatever you are not seeing on the chart, you take it off from your level. Now straight away I'm gonna do that for you guys. Okay, mitigation I don't trade, I'm gonna exit that out. Breaker block, yes, I have that breaker block thing in my idea. I have sometimes used that as well, although it's not very like, it's not every time I'm using it, but I have rest of the thing. Sorry, liquidity void, I'm gonna avoid that as well, because I haven't back tested or forward tested that. So for me, these are the 5 things that I can possibly look into around that level if I don't find a order block. If I don't find a fair value gap aligning with my OTZ or optimal trading zone. But I don't really need OTZ if I'm looking with all these informations. Okay, all these I don't really need to look for a OTZ. Why? Because above that 50% is where you are looking for your sell short entry. Above that 50, like the equilibrium, whenever it's 51%, that is your premium starting from there until that swing high. Now until that level you are looking for all these things. Okay, so I have removed what I don't use or don't have back tested, forward tested. Now I have this. So above this, either a breaker block or a fair value or a bearish order block or a rejection block, you will always find one of these is aligning with your OTZ. Okay, if you use your optimal trading zone, that 0.62 to 7 on level retracement, that is enough for a entry if you have any of this. Okay, if this is not there, then you have to understand that you are looking into the wrong move. As simple as that. Because if nothing like this is there, then the price is not done retracing towards the upside, so it gonna go higher, it gonna grab that liquidity, then it can give you that market structure shift towards your downside. I hope this part is clear, guys. I don't know how many are watching, I don't know what's happening over there. Same thing is happening with my sell short when price is in premium, okay, buy long, okay. When price is in discount, I gave you the idea about sell short because it's coming from the downwards toward the upside, and I'm expecting a like move towards the low, okay, swing low, okay. It can go violate that, it can come around this area to a rejection block or something, then it can go higher. Now rejection block, I already talked about it on my first part of the stream, but I will, before I finish, I will go and I will show you that as well. And since I don't trade the mitigation block and the liquidity void, I'm gonna remove that from here as well, okay. I'm sorry if I'm making you guys somewhat what it calls, where is my leak void leak, okay, I'm gonna remove this too, okay. So when you are looking for a sell short, you start from a breaker, fair value, bearish order block, rejection block, or that high. Now this high I have written here is because rejection block is actually very much like it's the same thing here, okay. It's the exact same thing that is included with your rejection block. I'm gonna go like why I marked high or low and then the rejection block is because when there is a huge wick on the upside, you will see us sometimes looking for the 50% level on that wick and the reaction from that. You will, I hope you already know that part, but I will explain this specific part before I go. Now let's say you are expecting a move towards the upside, okay. So where do you want to like you are looking for a buy long towards this high, swing high, like that's where the liquidity is resting, right? So you are looking to buy long. Price from a discount went to maybe around this level or even higher inside of the premium, then it's retracing, okay, then it's coming lower. From here it's coming lower. As soon as it comes below that equilibrium level, what you start to look for? First you start to look for a breaker block that you will find somewhat around this area. On this move up, like on this move up, what sort of move is this? Okay, let me draw that. It's some move that will look something like this, okay. This specific move is what you are looking here, okay. Just put it up higher like this. Let's say you are looking into a move like this. What, let me move it a little lower, okay, because I'm looking below the equilibrium. So the first thing, when price gonna come from here to a point of interest or inside of this equilibrium, what you gonna look into? You're gonna first look into a breaker block. Why breaker block is the highest level that I have marked here? Because low, high, lower low, market structure shift, that area you will find your breaker block, okay. So the moment price come to that area, close to that area, if you see how a breaker block works from here, that can be a possible entry point, okay. And you can scalp for this low, or if there is a short term relative equal low, something like that inside of that premium. Your exception is price gonna go towards this. You don't know if price gonna reject from any of this area or not, okay. So yes, you will find a lot of other things like relative equal lows, so relative equal highs that you can target on it on your way up. But what I'm saying here is, when price is from a premium coming to the discounted area and giving you that entry setup, you will first find breaker. If you cannot find a proper breaker, you will find a fair value. If you cannot find a proper fair value, what lies above the like below the fair value, since it's coming lower? Order block, okay. Order block is the thing that you want to see price respecting. If that is not the case, you will see there is a lot of time price coming very close to that low. Okay, that low, let's say this low is a wick as well, it's not just a candle's body, it's a wick like this. Okay, you will see a lot of time price coming very close to that wick, maybe like wick's midpoint, even above midpoint, with its body or wick, something like that. But later on it started going lower like this. Okay, I'm drawing with this color. Let me make it actually white so that you guys can understand or see what I'm trying to show here. Come on, where is it? Okay, so you will see a lot of time price coming very close to that level, but it never goes there, it starts to reverse. Okay, you are not getting that exact ICT 2022 model like this. Okay, liquidity, market structure, fair value, retest, state to go lower. Most of the time this setup is very rare. Okay, most of the time, I'm not saying you won't find it, but it's very rare. And the third, like the model that I love the most, it looks something like this. On the left it looks like this. Okay, 1 2, and on the right it looks something like this is 1 and this is 2. Okay, why I draw a level here? Because not every time price gonna react like this and like straight to the break of a structure. That's why I created a short-term swing low. Now I can consider a break of structure here, but I mostly consider here. Now there is your, let's say, fair value gap, price came to retest this fair value, or maybe your order block, or maybe something. I don't care about the fast move. I'm giving you my favorite one. Like when I trade forex, try this one. Even in indices as well, try this one, which is the second break of a structure model. When market breaks this level, okay, this level, this is your second break of structure. And when it gonna retest or what it calls retest a imbalance or something from here to there, it happens very quick. Like this second break of a structure retest is, it happens very quick because market wants to go lower as soon as possible. Like let's say it's a sell setup, that's what I'm saying. And if this is your fair value gap, for example, if this is your fair value, you will see most of the time price will keep some portions open here, because according to ICT that will be your I'm sorry, let me just move all of them to the right side, because market what it calls trading B is not allowing me to move the chart any further towards the right side. So yeah, so what gonna happen is most of the time you will see this is, according to ICT, this is your breakaway gap. No matter what other people says, 2 3 4 fair value gaps, I will wait until it goes to my OTG. Doesn't matter. Like if I'm entering from the first run, like after liquidity, first break of a structure, there is something here, and then price is respecting a secondary one, I will wait for a pullback until, if my OTG aligns with that one, I'm gonna wait until it goes there, and then it sends back. Now why I'm saying this is because what the hell, what is happening? I don't know, it's acting weird. Okay, because my chart is hidden, I cannot even see what's happening over there. Anyway, so you will see most of the time market is respecting that fair value, keeping some portion open. That's your breakaway gap, because it's breaking away from its original position, which was here, and then the recent swing low and high that it created. As simple as that. You enter here, your candle, no matter what your candle is, let's say this is the fair value gap candle, since you will see most of the time your entry region won't be violated. Okay, so what will be your stop loss if there is a wick with this candle? up to that far. Okay, not even on the third candle. Okay, if there is a candle on the left side that created that fair value, things like that, okay, you don't even need to go and put your stop loss on that high. So your entry will look something like this, sorry, this, and this is how you get that high risk to reward, because your, you see, like just by covering this much, which can happen within couple of candles, it doesn't take too long for this. From here you will see a very quick sell off, very quick, no matter, like even if it's 4-5 hour your drawn liquidity, it will happen very quick on that second break of a structure. And this model you will find it very rare as well. Okay, I don't know if some people wants to give you a multiple setup of setup like this, you can find that. Anyway, what I'm saying here is, lot of the time you will see price, what price gonna do is, even the let's say there is, the high is different like this. Okay, a wick, not this big but somewhat like this. Okay, and you will see a candle's body closing above the previous candle's body, but it may have a wick as well, but it's not going and taking this high. Okay, it's not taking this high, it's breaking away immediately from that area. Why is that? Why this happens is because I'm gonna go to live chart and I'm gonna show you. And when it breaks away from that area, you will find your first fair value to enter, straight away you need to jump in. It's like if your bias is on downside, I'm not saying like straight away you need to jump in, I'm saying according to your market bias or analysis, you will see a fair value around this area happening, you will see price respecting with the very quick candle, and then it gonna go lower like this. Okay, based on your bias, same thing, like the exact opposite thing from your buy long setup as well. You will see there is a low, next time price coming to that slow, like just reverse the whole scenario like this scenario. Let's see if I can right click and reverse or not. Can I reverse from here? No, it cannot. Anyway, so I hope you got my point. Just reverse the whole scenario. Okay, now the exact same thing gonna happen. Now what you want to see during this PD array or premium on discount arrays, this is like PD array. What is that? Okay, PD is premium and discount, and array is this, every single part of this is your every single array, as simple as that. It's going above that area, you are going for a long. Okay, you are going for a long, remember that, or buy long, you are targeting that high or something. So when price is coming inside of the discounted range, as soon as price comes there, you start to look for a breaker block. If there is a good breaker block, mark from the highest to the lowest point of that breaker block, see how price is reacting. You will find so many time to enter into a breaker block. Okay, most of the time price will give you like multiple reactions from the same level before sending off. Okay, unless you are during that news event or something like that goes crazy. Okay, however, let's say you didn't find that proper breaker block, then price is coming lower, right? Where you are thinking market gonna go there, but price after a liquidity market structure shift, it's going higher. What will be your next move? Fair value. Look for that fair value. If you know how to draw the OTC, draw the OTC, as simple as that, and whatever aligns there. Now let's say there is no fair value, every candle just like covered its way with wick when it was going up. What can be a possible area to enter? Bullish order block, right? Wherever the order block will be on the left side of this upward move. Okay, so order block will be around this side. You look for your bullish order block, mark that order block, enter into the order block, stop loss below the order block, exactly like at the low of the order block. Why? Because you are entering into a order block thinking that price will never take that liquidity before going higher. Okay, if you are entering for a order block entry, you know that price will not go, and this is why also when we are entering with that PDRS, okay, why I suggest people to put their stop loss at 1. Why even myself I put my stop loss at 1, because price still will have other places to visit. It can visit that rejection, it can visit that bullish order block, that fair value, that breaker block, whatever, like whatever is below your entry region. If you are entering into a fair value around this area, you will still have a order block below that area, so price may go and retest that. There will be a rejection block. I will show you what rejection block looks like, and I will give you the video as well for the very last time. After that you have to trust me if you want to learn from me. So rejection block, then the old low, that's the lowest point. Okay, so this is why I put here, because price still has a order block, a rejection block to come to, and then go up higher. Okay, if I'm entering here, that's why the OTZ is very important. Now you will find any of this, you enter that, anyway you can set up entry, whatever it is, it's going there. Okay, this is how you use the premium and discount. Higher time frame, swing high, swing low, market, look for your entry, like draw on liquidity and wait for market. This is where I'm gonna give you actually the video that I was talking about. So let me just bring it up. I showed people on my previous stream. You see this ICT mentorship core content, this is a 2017 core content. Okay, 2017, you go to this, you will see 5 defining HTF PDRS. Okay, higher time frame. Now whatever I showed you here, let me find it out wherever. No, I'm not gonna play the video. Old high, old low, rejection, bearish, fair value, liquidity. Are you getting this? Am I clear with this part? Whatever I showed you here, that is exactly what he talked about here. Okay, you see monthly discount, monthly premium, then that equilibrium or the midpoint. Above that midpoint you will start look like this, below that midpoint just reverse the whole thing on the downside. I think he already had it written. Yes, yeah, you see below that area, just whole thing reversal, first mitigation, bullish breaker, blah blah blah, you whatever, how many you can use, just use it like that. I hope this thing is clear. If you want to learn more, if I am not able to give you guys the idea about how I look into setups and entries, then you go watch that. And if I'm clear, thank you, and thanks for letting me know as well. Okay, exactly, that's what I said here, because most of the people, what happened is they started learning things from 2022 mentorship. They are saying I have watched everything, but 16 17 there are a lot of things over there that people didn't watch. 2016 came later. Okay, yes, I'm gonna give you some things over here as well. ICT has videos that came 5 years 7 years ago as well. Okay, you see almost everything I have watched. There will a lot of things that it won't show here, because sometimes I watch from my laptop and that has a different account logged into. But you see videos he uploaded, oh my god, I cannot even go to the low because he has so many videos. He has so many videos on his YouTube channel. Now I don't know if he intentionally posted these many videos or not, but what do you think? Like, he didn't say anything here regarding that. Okay, ICT on Bitcoin 2090, like 29k, let's talk about it 2 years ago. And then later he said, I'm thinking Bitcoin is going to zero, and I'm again saying Bitcoin will never go to zero. Okay, and Bitcoin will be the ultimate future of currency, like future of the currency things. Let me tell you that. Yes, it will see a lot of ups and downs. Like for 6 years, OTE premium you see, like OTE, optimal trade entry, 6 years old video, and now the people who didn't watch it, they will come and argue with me. I don't know what to say. Okay, there are videos that will reveal, like that 6-year-old video, see, like 4 minutes, 5 minutes, I watched it, right? Optimal trade entry example over there, optimal trade entry example, you can see that, right? And I already showed this thing, that's why it's not showing me that I watched the full video, but you know where did I got it from. There will be videos where you will see, I hope I can show you, ICT London kill zone. Where did I got it from? Asia kill zone, New York kill zone. Where did I got it from? You got it, right? What new traders should focus? Where did I got it from? Now in this video I found a very good thing. Okay, like if you guys are still with me, I highly recommend you to go and watch this one. Okay, you will find a lot of things that gonna clear so many things in, like ICT bearish order block. How many times, like this video came exactly 5 years ago, right? He already showed people order blocks, and then in 2007, like I don't know what to say. Let me go to the playlist one more time and let's search here. Okay, order block. Now people will tell, like you see core content order block, it came 1 year ago. Okay, let me go to that video, because this video came after the 2022 playlist was created. Okay, came after. Why I'm saying this is, as you can see, it came September 8 2022. Okay, this video, it came later, and people who watched 2022 model, some of them are saying ICT didn't talk about the order block, didn't talk about the breaker block, that's why I'm not gonna tell you anything about it. ICT said he is keeping it for his book. ICT said he is gonna suck my dick. I mean, fuck it, fuck those people. Okay, straight away fuck those people, because they don't, it came after, and you didn't watch that, but you watched so many videos so many times, you didn't find the order block. I showed you a video where ICT is showing order block 5 years ago. Okay, and since then till now, whatever he showed order block so many times. Yes, he will sell few things, and that's why I'm saying, like I'm finding so many things that others are not finding. Okay, anyway, if you watch my video, you trust me, as simple as that. You are here to learn from me, you have to trust my process. Okay, if you are here to learn ICT, okay, what ICT can do, if you want to be like that, you can be better than ICT, I'm telling you. Okay, I don't give a fuck about what others says. If that was the case, then there wouldn't be another, like why there is always a new richest person in the world. Okay, if you think like that, I cannot be better than him, then that's you limiting yourself from someone else. You can learn from me and you can be way better trader than me. I don't care about that, because some people has a better view, better thinking process, like ability, and maybe even better knowledge about trading. Like the way I'm looking at things, some people have a better vision around that area. Okay, that's why I'm saying you can be better than anyone. ICT, he needed, like if you watch his this sort of thing, this is his paid mentorship, where he is talking about support resistance every fucking day. Okay, every fucking video he is talking about support resistance, and then later on he said we target that. Okay, we target that. Why I'm saying like this? Okay, don't hate me for this. I have respect for this person, I have respect for his work, and I really appreciate that. But what I don't like is some of his, like the time I started trading, few of my friends, they even never had, like they even never heard about trading. Think this way, they never heard about trading. I'm telling you this. Okay, I already told you that how long I'm trading, but why I'm saying this is because the day I asked him, like, I all at a sudden I heard like he's practicing some sort of trading or he's trying to trade, okay, things like that. When I asked him, he said, if you don't mind, I'm gonna tell you something. What? You know, you don't even know the tea about trading. He said something like that. Why? Because he found ICT before. Okay, remember this. Like, listen to this carefully. What I'm saying here, I'm gonna tell you. Like, he's saying you don't know even tea about trading. Let's go to the live chart one more time. Let's say I'm a support resistance trader. What is a support resistance? Okay, and why I'm saying this over and over again. Let's say price on hourly, it respected or reacted around this area. Okay, now right side I have nothing. Let's see on the left side. I didn't even mark the candle. Okay, usually your order block is your candle like this, and if there is multiple, you mark all of them. But let's see, like, just marking one candle. Support resistance is what? Price came here, respected, send lower. That's a resistance. Now when price is coming lower from that, it acts as a, I'm not gonna show every single, like, acting as a resistance, acted as a support. Yes, there will be things like that, and this is when people are getting the ICT profits, or ICT is targeting these sort of areas, right? But what happened here, man? Price went above, people bought somewhat, let's say, like, at the closing of this candle. That's what mostly support resistance traders usually does. Like, when price breaks above that area and closes, that is where they puts their entry. So what happens is, on the next candles week like this is where they get their like entry filled. Now you tell me, from here price went there. Okay, so here they don't put a stop loss below this low only. What they do is, from this low they use some indicator. Like, I have the person I learned from, usually he use some indicators. Whatever the ATR is, like average true range of the last 14 candle is, he uses that, like, one ATR with it. Now just look how far it went before it reversed. You think people who are profitable, they are gonna hold it any longer after a move like this? Okay, like, I don't know what you are talking about here. People who has the trading knowledge, do you think they're gonna move, like, hold it? Support resistance can still make profits. ICT himself said that this is not the best way. Okay, this is not the only way, or this is not the best way. Why I'm saying this is because I already showed multiple times that what order block area actually is. Okay, what I draw here happened in future. This one happened, and this is where I'm showing you. Okay, now think the other way. You see, there any, like, I don't know any of the candle that you can actually select here. Okay, so this is the liquidity that price took. To become a order block, you need a old support level for a bullish and a resistance level for a bearish, okay, order block. Now this is the candle that became your bullish order block. Okay, now I'm just giving you an example. This area, remember this area, what is this? Also, this is your support and resistance area as well. Okay, people draw support resistance like this. Okay, the body to the lowest point like this, but I'm removing this. I'm just keeping this box. Okay, this box. Now let's see in future what happened. This was your past. Okay, this is what you draw, and you wanted to see some reaction. When price came lower than that, it acted as a resistance. It was supposed to be a bullish fair value, bullish order block, but it like, price came here, multiple reactions, whatever it is, sloppiness, choppiness, whatever, however you want to call it, came here, price closed lower than that area. Next time it acted as a what? As a resistance. Came lower, let's see when price came to this area in future. Okay, I cannot see it coming back there anymore. When came here, it acted, it went above, it acted as a support, it went above, acted as a support, went above. That, remember, before I draw this one, okay, this candle was my previous level that I was looking into, left and right. Okay, now price is still trading above. Now what I'm looking here happened in future, but this same area got respected in past. Why? Because that's a support resistance thing. Now why I'm showing you this, I'm sorry if I'm making you bored, is because your current order block ICT concept is actually helping us know that exactly by how much price can go, exactly around what area price can go, these sort of things. Why sometimes you will see market is not respecting a support level or resistance level? Why? That is what ICT is telling us, that it already took its liquidity from low, now it should go higher. Now it went above this area, took the liquidity, there is your bearish fair value, bearish order block sitting over there. If you don't want to consider this, this is a area that price is coming from here, took the previous liquidity, swing lows and other stuff. This can be your high probability order block. See, that is where price is respecting and reacting from. I mean, what I'm saying here is ICT helped us looked into candle, a specific candle. Okay, but don't think that people who are trading support resistance, they don't know trading. But anyway, my friend said something like that to me, and that actually got me so hard. I don't know, like, since he was a good friend of mine, I mean, he still is a good friend of mine, I didn't tell him or reply to him anything. Then also when I started watching ICT's videos, he said, I can guarantee, okay, it's not guarantee, I can guarantee you, you need to watch every video 5-6 times to understand. Even the first video, if you miss anything, you will need to come back. After watching all the video, you will need to come back to the first video. Why? Because here you will see ICT is going to weekly candle, that a daily candle, then hourly. You have to understand everything. I mean, come on, man. When support resistance traders trade, they trade like that. Okay, when they find something on the daily, let's say I trade on the hourly, what I will look into is something like this on the left or right. Okay, now since I have only one of this level, this will be my future level to look into. But for now, I can find some areas that price is reacting multiple times. Price came lower, came here, again came here, lower, this sort of area. Now support resistance, how they do it? Now this is a daily candle. Okay, what I want to see is like daily chart. Support resistance trader on a 4 hours, on a hourly, something like that. If that is where they are entering into a trade, where is it? Okay, if that is where they are entering into a trade, when price comes and close below on that lower time frame, they look into that reaction, and then again the second break like this, then they enter into a trade, puts a stop loss above this high with that ATR or whatever it is that is available during that moment, that much. Okay, then they target some sort of support resistance on the left. Now let's see, like, what can I possibly call my support resistance on the left? Okay, this price came here, already take profit is done. Now how much profit I could made? Okay, so came there, came lower, this is the entry. Oh no, sorry, on this candle I was talking about, right? Because that's the high that it created. Anyway, I'm not here to give you guys some sort of support resistance or something. That is how it looks like. Okay, some people targets 1.4, 1.5, things like that. I'm just randomly selecting it. Okay, if I reduce it, you will see it's going higher. But what I'm saying is they trade like this without even looking what happened, right? I could see where they can target. Now even if I go to higher time frame for my target, I can go even lower. Okay, where I can go possibly, like here I can see price created double bottom, double bottom, double top. It's the same shit over and over again. There is another support resist. Anyway, what I'm saying here is ICT helped us learn that thing, like how can I say, like he broke that areas into small things, small pieces with new names. Okay, I already showed you guys some videos regarding that. If you want to watch, you can go and watch. However, anyway, what I'm saying here is I had so many things to learn from. If you are here to learn from me, you learn from me. Okay, I already showed you a lot of things during my previous live streams, during my videos as well. I don't need to know everything about ICT trading concept, or sorry, what it calls. Come on, my friend had that channel name. Now, if I say like this, people may take it to him and think like I'm talking about him. ICT, okay, the inner circle trader. Okay, sorry. So I don't know everything that the inner circle trader or ICT himself is teaching us. Even he said you don't need to know everything, you need to master few things, and that's what I was trying to give you guys. Now, during when I was giving you guys that premium and discount thing, let me go to like 1 hour. I think that is where I was showing you guys. Okay, and I already showed you that every single entry that you take with your OTC is actually in your premium or discount. Okay, depending on which side you are going. If you're going long, it will be in your discount every single time, and it will be your premium every single time. That's what I showed you already. But here I talked about breaker block in my channel. I said what we expect from it. I just gave you guys the definition and the expectation. Why I'm giving you things like this way is because I want you to observe this. If I give you that, okay, this is a fair value gap, price tapped here, rejected, came lower. Now I want to see that price gonna come again to the fair value gaps lower portion, and then give me a doubt, like if it comes again to that lower portion, I'm gonna go and sell short. Now, if I give you everything like this way, just think about it as a fair value gap. If I tell you everything like this, okay, don't try to get confused or anything. I have a different vision of teaching people, as simple as that. That's why things will differ. Every person has different opinion. I want you to learn from this is because I want you to observe it by yourself. I don't want to tell you that price gonna come here and do this, that. What I told you is, when a fair value gap, let's say there is this fair value gap. Okay, let me remove everything. I hope you have this understanding, you got this. If not, it will be in my stream. Just go back and watch one more time. Now let's say this is a bearish fair value gap. I gave you first example what is a fair value gap. Okay, now bearish fair value gap is also called sell side imbalance, buy side inefficiency. That's why I'm gonna write that here. Now what I expect from this is price, no matter like wherever it is going, whenever price coming back to this fair value, it gonna act as a resistance. Yes, it can go here, it can go here, even the wicks can go higher than that, but eventually I'm expecting it should act as a resistance. Price gonna continue its move towards the downside. Now I gave you what this fair value gap, like how this is a fair value gap, although the candle didn't close, but I'm just, for the sake of this part, I'm saying what I want you guys to do at home is, you see, you find this on the old data. Okay, this is a bullish fair value. I want to see it should act as a support. You find like this, you figure out that if price even come lower than that with the candle but close inside the fair value, it should act as a support. Is it going higher from that fair value or not? If it's going higher, what can be the possible levels that I should look? Now you will find a lot of, like, is this fair value is filled completely since that week came out until this point, and then it took that recent highs and also some maybe previous olds, I don't know. But I don't really need to look that. I need to look now where price did not fill here. Now why it did not fill here? Can I find anything here? This is how you need to learn, man. I cannot give you everything and then I need to give you that you see that premium discount. This is where on the lower time frame you will find a lot of other things. As simple as that premium discount, it came to that discount, then it went up higher. Now from higher, where is it? It took all the liquidity. Let's mark from here to here, okay, like this, because this is also a swing low to swing low, swing high to swing low. Price when came here with this week, you see like fair value gap came here on the lower time frame. Maybe there is something that could give you the entry, I don't know, I didn't look into the chart. It went up higher, it took that liquidity every time. I mean, I don't know how to tell you this. Now where is price coming? For this low first, okay? Don't think that it's going for any other thing. Now I'm gonna mark like this, since I cannot see a very good structure or liquidity like this. Higher time frame, high and low. Price came to that low. Now will it bounce back? I don't know, it can bounce back, but what I want to see around this area for that. If my bias was higher, if I was looking for a bullish run like this, okay, like in between there will be structures, but like this on the higher time frame, I will go on my lower time frame around this area. What I want to see, I want to see something like this happened around that area on the lower time frame, okay? So that thing will give me the way to go up higher, okay, inside of that discounted like inside of that premium. And then I will look for my possible take profit areas that I already showed you earlier, when I like earlier in this specific part. Now why I said I want you to observe it by yourself and learn it by yourself, okay? Don't get me wrong. Why? Because when you look into, now I can take entries like this so many times. You see, this is the entry. If I'm not wrong, I will have a different entry as well over there. You see, like, okay, let's give you this one, okay? I wrote here it won't hold. You see, I'm already into a trade, okay? Now I will close this trade for a reason. I will talk about that later, or maybe inside. Okay, just a second, let me just mute that, because I was watching this is why I didn't upload. I already showed you guys. Okay, let me just mute on the OBS studio, okay? I wrote it here, just focus over there. Now I wrote it won't hold. Why? Oh shit, it's still there. Shit. Let me, okay, I had a lot of things to show with you guys, but it won't hold, it won't hold. Okay, am I too far actually? Okay, let me show you what happened here. I said it won't hold. Wait and watch what happened during this area. And why I said that, I'm gonna give you that as well. Even, oh shit, come on man. Now you'll see a lot of moves over there, okay? You will see a lot of moves, but just look what happens during that moment. That was the news time, okay? Because I'm still like, I'm with my mouse pointer, I'm saying I'm expecting price to go lower than this. Even I will remove this fair value gap if I'm not wrong, okay? I will remove this one as well. But look what happens. See, I removed it. Now look what happens over there. Why I'm looking into that fair value? Remember the premium and discount that I talked to you? Have to go, but we'll look at your videos later. I have seen that you have a lot. Thanks a lot, brother. I mean, I'm sorry if I'm making you guys bored or something. I said it won't hold. Yes, you will see some reaction from this area, but just watch how it breaks below that line. And I'm looking into the chart while I'm in a live trade, okay? I don't know how my video is actually zoomed in that much. You see I have a position opened over there with 2 lots. Okay, now let's see here. Can I add some clip speed to it? Add clip speed, let's make it 2x. Okay, oh shit, 2x actually moved the whole thing. I wanted to show you the candles. Don't worry, it didn't hold later on as well, like it don't hold these 2 candles weak. I hope you can understand. You will see there was a news and you will see something crazy happening right here. That's why I was trying to show you the whole thing, but now I realize like it gonna be 1 2 3 4 5 6 7 8 9, then the final thing. Why? You see this candle, and now a lot of people gonna come and teach you that this is a hold, but wait until this candle close. Okay, why I'm saying this is you will understand after looking at that candle. You see I didn't remove that it won't hold or anything like that. Just give me some few seconds and wait until that candle closes. Where did it went? Okay, let me, I actually said those things, but unfortunately it recorded all my desktop audio that I was watching the cricket match. You see that balance price range, I said over and over again, look for the common areas. You see that's bearish fair value, or in this case I had some volume imbalance as well here, but that one I marked here. Okay, now why here? Price disrespected it, immediately came down in like came back there. That's why it didn't even take your liquidity from here. Now there is this part, I will tell you later on why I put my stop loss here and then entered. Okay, there is this part, remember this. But look where that candle closed. Okay, and that common area, how far it went, exactly inside of that common area. Now look where that can, like what it looks like. Okay, that is what it looks like. You think it's a usual candle, or you see anything like this, like huge wick and then no body, nothing over there. FOMC member speaks, whatever, there was something. When I saw that candle, I straight away came there and wanted to see. Okay, now look what happens here. This candle is coming lower actually. Okay, maybe closing around this area, and then the next one gonna come lower and eventually close as a red, if I'm not wrong. Okay, this is all happening live. I'm not like, I'm in a trade already. Remember here, you see I'm in a trade. Okay, so whatever I'm doing here, it's live. I'm doing it live, and you want to see my trade of weight, here is my trade of weight. Okay, my account that I use. Now anyway, I hope you already got my point here. I'm sorry, Remigius, if I'm making you bored or something. Like when it came lower like crazy, and then it eventually took all the sell side liquidities, whatever I targeted over there. Okay, I forgot that it doesn't play. Okay, now why I thought it won't hold first place. Okay, if price, when I saw, like simple, let me make it clear and let me make it quick. I don't want to make you guys wait the whole day. You see the very next candle, it came lower and closed like that. Eventually it took less than a couple of minutes to take that liquidity from there. Okay, like look at the candle size. Why I thought about that? This happened because of that bloody news over there. Anyway, why I thought anything about that is because price I saw is continuously disrespecting any bullish PD array. Okay, so it's giving me the high indication that price gonna, like let's say it's a bullish fair value gap, price came straight below that, went up, came again lower, it disrespected this as well. Now it can turn into my inversion fair value. Now that's what price actually did here. It has a order block with that fair value gap that price disrespected. Now is this my inversion fair value? I don't know, I didn't look into that properly, and it's a 15 minutes fair value that I'm talking about. Now why I looked into that, price disrespected every fair value gap or other bullish PDRS on its way down. Why you think it will respect another one in the way before taking the liquidity it is going for? That's what I was actually giving, like I was thinking, or my thought process was during that time. Now what I want you guys to do is, you guys go through your chart, you guys learn it by yourself, observe it. If you have any confusion, ask that to get clear identification or indication like that. And remember the high or something that I showed over there on the video, that remember this high, something like this, that price didn't take the liquidity from. I will try to find a place like that. Okay, you see this candle's high. Why I'm showing it is because this is your rejection block. Okay, bearish rejection block, regardless of the candle color, whatever candle has the highest point. Okay, the highest point of a swing high, let's say here the green candle, you have this. If it was coming from a major level, remember the order block, it's the exact same thing, because it need to have something on the left as well. Okay, it need to either grab the liquidity from the left, or coming out from a resistance level, or you know, the bearish fair value, things like that. So that's what you are looking into when entering into a trade as well, regardless of the color. Here you don't have anything on the left until, like, unless you just count this and this, then you will get a lot of liquidity already taken. And yeah, so anyway, okay, and with your bias and other stuff, you will look for a entry setup around that. If market is bullish, you are not looking for a bearish. But why I just came here is because just to give you guys the idea. So this specific candle is your rejection block. In this case, this is your rejection block. If market respected that, market didn't respect that because market had even liquidity higher maybe, or whatever, I don't know. Anyway, because I didn't look what's on the left. However, here what happened, this high already took, this is a major swing high, this is a major swing low. In between I can find something smaller as well, like here can be a possible swing high. And this is why actually I have a set rule for swing high. I don't look one candle on the left, one candle on the right. I look at least two candles on the left and two candles on the right. If that happens, this is your swing high and this is your swing high. Like, sorry, this cannot be your swing high because the right side it has only one candle, but with this one it has two on the both side. That's why this level is very important. Okay, so why I'm showing this is because this level was violated with this week, and price took the liquidity with that as well. So it looks something like this. Okay, so this candle already took the liquidity, and this usually had to be my rejection block, that specific candle. But why this is not? Because why I said like two candles on the left and right on the very first video that I uploaded on my channel. Okay, maybe not the first, I think first was what is a candle, the second one was about the swing highs and lows that I talked about. Okay, why I didn't take this one is because it's not. If I go and add that fractals, okay, that indicator, just look here, nothing is here, only thing you can see is here. Okay, so liquidity is taken here. Now you see this candle, regardless of the color, this candle came here, doesn't matter about the 50% or anything, it cannot go and create, it can be multiple candles as well. Okay, that's ICT said, like it can be two back-to-back candles or three candles that have created exact same high, and then send the market, like market came here, tested the very next candle, it literally in one candle you got your market structure shift type things. Okay, on the lower time frame you will find very good market structure shift here, and then you have a higher time frame fair value here. On the lower you might get a higher lower time frame point of interest to enter into your trade. Okay, however, what I'm saying here, you see, like eventually price came way lower than that. So let me just mark this one and let's see like what happened inside of this. I think this was the silver bullet I was talking about earlier, but still, let's see. You see this whole move here, and the candle that I was talking about earlier, now it turned like this. Okay, the rejection block or whatever you want to call it, this is your rejection block. Here there is a little bit volume imbalance, and then price went there, came lower, retested that, came lower. Now you don't have a what it calls, you don't have a possible like liquidity grab market structure shift around this area. Why is that? Because it's respecting that rejection block. It's from the body. If it's a green candle, from the closing to the high, red candle from the opening to the high, as simple as that. This can be a possible rejection block if that is a case when price is reacting. But you have a order block here, you have fair value gap, you have lot of confluences to enter. Remember, I draw the fair value gap around this area, and now look, price literally is giving you so many setups here as well. Okay, just simple, you don't want to risk here. When market came lower, went above, retested that order block that is coming from your rejection block, then it gave a market structure shift with this one, or break of a structure. There is your fair value gap, enter there on the fair value. You see, I'm talking about this one. Okay, enter there, target the nearest low like this one. If you are coming from here and if you have clean liquidities on the low, you go like that. But I'm giving you some example. Okay, don't think like this is the entry that I can have, or I'm showing because I saw market went lower. Not like that. I'm giving an example. Now this can be a possible rejection block. Why? Maybe on the left side there are some major liquidities or whatever it is. I'm giving you the idea. Okay, what can be a rejection block here. You see here, price did not touch that high or closed above that high, but what happened with that, it went up to that level, it came lower, immediately next candle send it lower. The next time it went inside that area, it just retested or whatever, there is your fair value, there is your market going lower. Okay, and you can target lows like this. I don't know, it's I'm not giving you entry setup, I'm just giving you some possible example of rejection block. Okay, and this sort of area, why and what is this actually? This is on a lower time frame a major level of support that later on acted as a resistance here. Price sent higher, came lower, acted as a support here. Sorry, this is a major level of resistance, went above, when came lower, acted as a support, went up, finally broke that area. Maybe price didn't go there anymore, but later in future it can go. This rejection block. Okay, and you want to know where did I get it from? Just write rejection on TION. You see that mentorship core content ICT rejection block. I'm just gonna give you the, say I said like today is your last day of giving you guys proof. Okay, now why I don't want to give you, like you see it took the liquidity from left, that's the line he draw, and that's where he's giving you the focus. In between he will show you more, and that's why I showed you some in between. Now look, this is the area he is marking. Okay, in the here you see that high was intact, although candle's body closed above that closing, he is saying this part is your rejection block. Bearish rejection block is when a price high has formed with a long wicks on the highs. Okay, wicks it's like a bracket, like it can have in one candle, it can have in two candles, three candles, any like wicks. In highs there can be multiple highs over there, like similar exact same high as well. You will see sometimes there are clean equals in 2-3 candles, but market is not taking that liquidity, it's sending lower. That's because of it's your rejection block that you didn't know before. Okay, now you know. So yeah, what happened, price reaches up above the body of the candles to run buy side liquidity out before price declines. So above that body of that candle, above that body of that candle, it went up but declines. What is that decline look like? Let's go. I have it, I know it, but let me give you. Okay, you see that mark? Now look at the decline. Just a second. Sorry, I had to grab some water and some other things anyway, because I've been talking for a long time. Ideal setup in measure to intermediate term downtrend. This is a huge downtrend. Okay, like right when it rejected from there, it literally that same candle created your fair value gap, and that's what I was showing you right here. Okay, on the I think 15 minutes candle. Where was that? Here. You see that area that price rejected, took the liquidity from, and then what happened? It went there, ran above that body, like the wick went above that body. It can go, like even the candle's body can go, but it cannot take that liquidity. If it takes the liquidity, then you look for your rejection block there. Now it there, one single candle came below, created that fair value, ultimately it delivered for your sell side liquidity. Okay, now there were news, it went up whatever it is, but by from there until this level, I think you will have huge amount of profit over there if you know how to enter from a higher time frame to a lower time frame. As simple as that. That's what I was showing anyway. So I hope I was able to give you guys something regarding that. Now what I want you guys to do is, you guys need to learn this by yourself. This means the reaction, you observe it. Learn means I want you guys to observe that what can possibly happen. Now why I can consider this as a fake breakout towards the upside, even though it is coming up from this bullish fair value. Okay, this is coming up from this bullish fair value. Let me just take this one off for a second. What happened here? Candle came to this, closed above, showing the possible what it calls respect of this fair value. This candle went up higher, immediate next candle came and even closed below that fair value gap. What does that mean? Now it's maybe during the news event that you have a huge week like this, but just look what happened. Like even right now what's happening, and if I'm not wrong, there is actually news event as well. Yes, USD consumer sentiment. Already Fed chairperson Powell talked about that. Okay, that's on Friday. I think it's the Powell stock, 2 p.m. or something. Yes, so 2 p.m. That's 1 p.m. candle, finished at 1:15. Yes, so this all thing, like before Powell speaks, now Powell has spoken. Whatever is happening here, these huge wicks and candles is happening because of the news. Because I had one at in the morning, I had one in the afternoon, and that's what happening right now in the market. It's okay, it's now 2:37 or something, so easily that can be that. Anyway, I'm not too much into the PM session or something. I cannot do it every day. Tomorrow I have day off, that's why I came here. Okay, but what I'm saying or what I'm trying to give you guys is very simple. Try to look for these things by yourself. What gonna happen is, if you look for these things by yourself, you will have it mapped into your eyes. Okay, you will look it before it is happening. You like fast forward, like let's say this is your liquidity but market is still going lower. What you want to see is what market does after this low or this low or around this, or if there is any other fair value gaps or something. Just draw like this. Okay, draw like this and see if, like, since I'm on a 15 minutes, it's gonna take longer, but on a lower time frame, just look what happened here. So what you do is you go to higher time frame, maybe 15 minutes, 1 hour, or even higher if you like. Mark the areas like highs, lows, possible order block or breaker block or whatever. Like, mark those areas, come to 1 minute, see how price reacts around that area. Inside of that area, if you get a some sort of like liquidity grab, market structure shift, things like that, and then there is a fair value price coming there, going up, look into things like that by yourself, mark it, and you want to see this wire inside of a higher time frame point of interest. Okay, inside of that, it can happen sometimes like this. Okay, outside of that area, but immediately it can go above. There will be only wicks or something around that area. Okay, this is what you want to see and how price is reacting from there. Now I just draw a 15 minutes buy side imbalance, sell side inefficiency, a fair value gap, that is called BISI. Now will it hold? I don't know. Should it hold? Possibly should not. Why? Because from the daily my bias is that price gonna go and take the sell side liquidity. It already took it. It already took that sell side liquidity. Why? Because previous day it took the buy side, failed to close above. Only 3 candles I have my bias set. Okay, now why I'm saying will it hold? No, is because remember I said about the due liquidity. This is your due liquidity and this was the liquidity that was due. So if it holds, it won't be able to take this liquidity. Also there are some fair value gaps that I'm expecting price to come, and then it can continue higher if it wants to go and grab these liquidities and retest the fair value or anything from these areas. I don't know, like, let's see what happens in the market. All I need to see is where this market closed today, like after the end of the day where it closes, and after that I can consider looking for a possible sell short or buy long entries. Okay, as simple as that. I really don't need all other things over there. I said daily is more than enough, the high and low. Since this is the high so far I can see, and market is going lower, and this day gonna finish within 2 hours, I don't think price gonna go and close above that high and create a new high there. However, I don't want to mark a low over there. Okay, so this is my next day's possible buy side, and wherever it closes, depending on that, I'm gonna look into my possible sell side. Also this is also a due sell side, I'm gonna mark that as well. So sell side due. Okay, this is a due one, that's why I'm marking it, because there are reasons for price to come lower. You see, for people who marks one candle as their swing low, this is your daily swing low. Okay, price took that liquidity, gave you market structure shift. This is the candle that you can mark as your like low, high, lower low. That's your breaker block. I'm not going in depth. This is your fair value gap with that breaker block, and there is a volume imbalance, so I'm gonna mark the entire part like this. Okay, so breaker block and volume imbalance, I can see the common area is around this area, and I'm expecting this price to come first here. Okay, take this. If not respecting that, because there are some balance price range as well, if I'm not wrong. Yeah, so if I consider that volume imbalance, you will find some fair value gap aligning with that as well. But forget all this. If price wants to come lower, this is how far I'm expecting price to come. As simple as that. I'm not expecting it to go lower and grab this liquidity straight away with this move. before finishing its unfinished business on the higher side. Okay, that's my expectation, not what gonna happen in the market. No, I'm not saying something like that. Okay, let's see where it closes. If it closes below this low, I'm gonna target wherever it creates the low for the day. Okay, and my bias will be even lower, as simple as that. If it closes below this low, I will still expect for a sell side delivery regardless of the candle color, as simple as that. And that's what is happening the whole time. If you calculate, yes, no one can 100% correct, or no one can be 100% right about their analysis. That's why there will be some losing trades as well, and there will be some losing trades, but it has really simple but high. Just go and check whatever happened over here. Okay, like draw on liquidity, just select a point, looked on left and right, like what possibly have there. Now look for the high and the low of that candle, like with the wicks, whatever, no wicks, then from here you draw your high and low. Wherever the next day closed, like below the high or below the low, if it closed, target the next low. If it closed above, target the next high. It's like that. Draw every day, like do your back testing over these areas. You will see you don't really need too much of the things. Okay, and when there is a equal or liquidity grab like this, expect some sort of opposite move, and if that move is aligning with your bias as well, that will be even better and high probability. So there is this equal low market took inside of, like there are other lows as well here inside of a daily fair value. I was expecting, even though the market closed below that low, instead of this I was expecting a bullish around this area. That's why it gave me that bullish. Okay, as simple as that. Now I cannot be right all the day, but just look when this bearish happened. Was I a loser or was I a winner? I expected this bullish when price took this liquidity. Okay, it took the liquidity, gave me a bullish move. Even that was not the case. Just think here, price closed below, took the liquidity, this was the low that I can target. That's the low, price took the liquidity, failed to close below. Okay, so what is the next target? That high. Took that high, failed to close above. What is that next target? This low. Took that liquidity, close below. What is the next target? This low. Took that liquidity, close below. What is the next target? This low. But why I didn't target it? Because it already took, like here you won't see that. Let's see, like if settlement can show you that or not. But on the ES and like I mostly trade ES, and that is the liquidity. So on the ES you will see something like this. Okay, there is a huge fair value gap over there that price was respecting. Let me remove that settlement. Okay, it doesn't adjust since the candles are not clean here. Okay, over and over again I'm showing the exact same thing just to give you guys that how simple it can be. And why I'm saying this is because you guys are missing out on the most important thing, that the simplest way is the best way to prosper. Okay, small steps are the best way to become your profitable trader for longer time. You don't really need to think about like you cannot be a millionaire within 2 months or 3 months. Okay, you cannot if you don't have another million dollar to risk. As simple as that. You cannot, because you cannot risk your whole $1 million in your single trade. So this is important to understand. ICT, hey, what's up? Awesome to see you again. But ICT looks 3 candle only for swing. Why do you see that differently? Okay, I'm sorry if I'm missing it or if I didn't answer it on time. If you are still here, why I'm saying it is because I look it like that. Okay, I look it like that because I, with my personal opinion, I have saw that single candle. Yes, ICT has lot of experience, maybe he can trade like that, but I saw that a single candle swing high swing low can give me a lot of false breakout or break of a structure, okay, like false move on the market. The single, if I see like this is a swing low, price came here, then it's a daily swing low, okay. So let me, I don't think I will be able to look into that area on a smaller time frame since it's a very long time, but let's see, like daily to where can I go, 1 hour. This was the swing low. What I'm trying to say here is there are some bearish things now. Many things happened here. I don't know where the market is coming from, but what I'm trying to say here is, you see, like market already took some relative equals from left on a bullish fair value, blah blah blah, whatever, like however you want to take these parts or these liquidity levels. It has a bullish fair value, it's respecting that. Now if you are targeting from this fair value to this high, then yes, you are profitable, congratulations. And then it came lower on more time for that specific thing or move, okay. Now why I'm saying this is because there will be a lot of single swing lows like that. You see there are a lot of single swing lows, like took liquidity, went above, there is a fair value, whatever, bearish or something, that price did not respect. One candle, it's sharing the exact same candle on the both side. But if I consider two candles here, two candles, 1 2 1 2, two candles, it's not sharing the same candle on the both side. It will have the criteria, like both side means this swing low or this swing low, it's sharing this candle, okay. The middle candle, it's sharing. So this is a swing low, this is a swing low, that's a liquidity grab. Is it like that? Every week that is crossing each other, it's a liquidity grab in a sense. But is this a liquidity grab for your higher move or something, higher run? That liquidity grab, immediate next candle became red. Yes, it's a bearish order flow, I'm not showing you any entry or anything, but it's my personal opinion, okay. Like my observation says that if you look into two candles on the left and right, you will get better things, like you will get less fake swing highs or swing lows or fake breakouts. That's why I hope you understand that, okay. It's my definition of swing high and swing low. Also I found few other people using that, but not ICT traders. I don't know if you are here or not, but I think I have made my point. I think you guys took the note. If not, wherever I showed you the premium and discount, okay, the premium and discount, I hope you have written all those PDRs, and I hope your higher time frame PDRs or dealing range, this sort of thing is clear. If not clear, go to ICT mentorship, okay. Here is your ICT mentorship, go back there, search for PDRA, okay, price daily premium discount arrays, PDRA introduction market review. You can watch this, maybe, I don't know, this 2023, maybe watch this one first and then go there. You will have the idea what he's saying here and what he's marking here. It will give you better opportunities, okay, to understand that. So core content, month 5, defining HTF PDRS, high time frame PDRS, okay. Yeah, I think I have done enough teaching today. Maybe tomorrow if I get time, I'll try to get back once again, but for now yeah, I need to take my leave right now. So until next time, take a very good care of yourself. And as I'm saying over and over again, if you are trying to learn from me, you need to trust my process. Okay, that's what I'm here to teach you. I'm not here to teach you how you can use this, how you can use that. I'm giving you the definition, you find it, you figure out, create question in yourself, ask that question on the next stream. As simple as that. If you don't have questions, you don't have anything to learn. As simple as that. Okay, you must have question before you learn. You have to have some difficulties. If you know everything, then you will never practice that. You don't now practice how to do the simple multiplication or addition or subtraction or deduction, right? You don't need a calculator or a pen and paper to say how much is like 15 plus 5. Okay, you don't need that anymore. You can say straight away 20. So why you don't need it? Because you have done all these over and over and over again. That's exactly what I want from you to do in your chart, in your forward testing. Sit on a, it doesn't matter, sit on a 1 minute chart. Okay, mark all the, first go to the 15 minutes, mark whatever, like here you can see some sort of liquidity market structure. So mark the fair value on the downside and mark the highs and possible relative equal lows. Like here you see, like there is your relative equal lows. You know that market most probably gonna take this liquidity. Market took that liquidity. Okay, I think you got my idea. There are some relative equal lows. Can market go there? Yes, but what market needs to do to go there? It needs to go and disrespect this huge fair value. It needs to go disrespect this bullish order block, like these sort of things. That's what I'm saying. Like mark this, mark, watch, observe what price is doing. There is a huge wick over there. Mark that wick's 50%. Okay, this the lowest wick that you can see. Mark this wick, maybe extend it like this. Look what price is doing around that area. Okay, if price is respecting that wick or not. Why wick is important? You see that wick here on the 15 minutes. In 1 minute you will find a lot of other things around that area. Okay, if I'm not wrong. You see, what can you see here? You see a order block, you see some fair value gaps with that order block that previously price respected, went above. That's your wick. Remember, the whole area is your 15 minutes wick. This is your order block. Now mark that order block in 1 minute. Now let's see what's happening over here. Okay, where is it, man? Come on, I want to finish here. Okay, what happened over here? Price first came here. Okay, let me remove the other one, wicks on. Now it's only your order block. Price came here, respected, went up, but it failed to go above that bearish order block. Why? Because the order flow is bearish and market most probably it can go lower. Now if it went higher, and if it, just think this way, if it went higher, okay, and if it broke above, now what you want to see is what market does on the bullish things. Why? Because that's, if you consider like this. Okay, if you consider here your liquidity, your market structure shift. Why I'm saying if you consider here is because price already took your expected liquidity levels, like all these major liquidities from the left. Okay, that's why I'm saying if it goes and close above that. Now what price currently did, I don't know, like if it gonna go for the bullish or not. Where can possibly go? There are equal highs, equal highs. Even these relatives are also important. Simple, don't need to go all the way. Just look here, what happened here. Market grabbed the liquidity before breaking above. Okay, now is this a liquidity grab or is this a breakup? Oh sorry, I'm marking over there. Anyway, is this a liquidity or is this a break of structure? If you watch my video, you will know what I consider this sort of thing. But why I'm saying is, you don't need a strategy now. You need to look for these areas. Okay, now this is a liquidity, that's your swing high. Even if price goes above that, you can simply go and target for these things in your mind, in your setup. Like let's say it went above there, there is a fair value that you are expecting price to retest, and you enter like this, a stop loss here or whatever, like I'm just putting a random one. Okay, and then you target this and see like how price is going there, where price is respecting, reacting from. Mark that area, try to learn that area, okay? And then if you don't understand, you come, you say like, okay, on the ES or mini S&P on 9th November 2023 at around 1 p.m. or 2 p.m. I found this move, but it didn't give me this sort of thing. What can be my possible wrong? What I did wrong, I cannot understand. Can you please help me understand that? I can help you with that. Okay, your liquidity graph market structure shift, if it valid, I will help you with that. Is it valid? I will help you with that. But if you want to know like what is your liquidity graph, what is your market structure shift, that will never make you a profitable trader, because you already have idea every time there is something like this happening, either it's your liquidity or it's your market structure, depending on where is the draw on liquidity. Now this was my major level, price is trading below that. Do I want to go any lower than that? You need to look on your left on the higher time frame what is waiting there. Okay, now I showed you the weeks. If remember what I said here, I can expect price to come inside of this 15 minutes fair value. Okay, it's a 1 minute. I'm just like 1 minute candles that I showed you earlier, and this is a 15 minute. Why I'm giving you 15 minutes and 1 minute is because you can, whatever time you get during your, you have a job or you have other things to do, whatever time you get to learn these things, for that moment you will have quick reactions. You can see, you can find lot of quick things around that area. If you go higher time frame, it will take longer time for you to observe. Now you don't look into every liquidity, every market, like you will get confused. Okay, so why do it like this? Okay, let's say this is a liquidity graph. Now this will be my market structure shift or change of character. If price goes and close above that with displacement, how? See, like this level was violated with candle that created your fair value. Sometimes the candle will be long like this. This is a very huge displacement. Even though market was doing this, people who knows, they might still find a setup for going short for that liquidity that I marked, okay, around this area. Why is that? Because the move it did, it's a very powerful move, and then it consolidated most of the period to a imbalance. It's respecting, see, like every time price is coming to this fair value, it's coming lower, again coming to that fair value, coming lower, coming to fair value, coming lower. From where? Most of the time around the midpoint. Sometimes it went up high, there is a portion that price kept unfilled, and then it's going, what I talked about, your rejection area, rejection block area, from the body to the high. So when you see there is a fair value gap where price is reacting or respecting, you mark that area and see like if that high is also getting respect like this or not. Even sometimes you will see price coming to the low and then going, even it won't come it won't come back one more time. It came once, it gave you that with this candle, it came lower, the next candle has started. When this is happening, where this is happening, try to learn that why it came multiple times. There is your what, that is your bearish order block that price violated. So this order block, if it's a order block, okay, if it is a order block, what gonna happen? It gonna, since it went above, it gonna act as your resistance. When price came lower than that, it acted as your support. Sorry, what I'm calling, when violated up, it's acted as your support. When came lower, it's acting as your resistance. Now is this a valid thing? Is this something I learned from ICT? No, I didn't learn from ICT. But what do you expect from your bearish order block or a bearish fair value gap? That it will be respected, act as your resistance, as simple as that. Price will come here and go lower, continue to go lower. Same thing here. If this is your order block, price will come here, respect this. If, okay, I'm saying if, because it's not your order block, but just for the sake of this part, okay, this is what you learn. Now it went, yes, it's a order block in a sense, but no, it's not your order block. What is your order block here? Your order block is this one, the big one. Why the big one? Is because it's coming down from a imbalance. It's after rebalancing a imbalance, it's coming down. Okay, like this specific candle that is coming, and then after that candle happened and this thing happened, every single candle respected that. Don't take your order block, take that part as your rejection block. Okay, this part only. It needs to, price needs to go and trade above that body of your rejection block, and it's coming from a fair value. Went, trade above, yes, the body is here, trade above, yep. Now came lower, it came consolidated. Next time it didn't even consider going there, since that's the midpoint of your fair value as well. It came lower. Anyway, these are the things I'm saying. You guys need to look in your way. Okay, it will be in your memory, in front of your eyes, next time you are trying to trade or trying to look for those things. So I hope I was able to give you guys the idea. I'm sorry if I'm not making any sense or anything, or if I am unable to give you guys the what it calls, the expectation wise learning or lesson or session, however you take it in this live. But yeah, that's what I was trying to give you guys. So I hope you will enjoy the rest of your day or night, whatever it is. Take a very good care, and